Hi everybody, Ken Hines here, HFR President with the HFR 500 April 2024 Performance Snapshot. April was an interesting month. Markets hit a major inflection point right at the beginning of April, where we saw a complete reversal of the risk environment that has really dominated not only the first quarter of 2024, but the last 5 months, which have been dominated by strong risk on sentiment, optimism about falling inflation, lower rates, and strong performance in technology, AI, and cryptocurrency. April, we saw a lot of those trends reverse right at the beginning of the month. We saw economic data that showed that inflation was still persistent and not falling, and a lot of the optimism about rate cuts was priced out over the course of the month. Interestingly enough, we actually saw a very strong month of performance, even when bonds declined and when equities declined. We actually saw very strong performance in hedge funds. The HFRI 500 was really unchanged, with some strategies up, some strategies down. And actually, the HFRI asset weighted composite, we're going to talk about that a little bit, actually posted strong gains for the month of April, strong inversely correlated gains. We'll talk a little bit more about those as we go through the slide deck here. As I mentioned in the previous slide, the performance for the month of April was really driven by macro. You can see here the HFR 500 macro index gained over 2% for the month. The overall asset weighted composite, which is a composite of all strategies, gained about 0.7%. The overall HFR 500 composite was just narrowly changed, declining here 20 basis points. We saw about the same performance for fixed income based relative value strategies, and larger declines about 1.2 and 2.3% for directional strategies for the month. And you can see those well ahead of the sharp decline for US equities for the month. This is interesting, not only that you saw strong performance of macro strategies, and really all hedge fund strategies, primarily macro strategies, when equity markets declined, but what really interesting about that, and categorically, we understand macro strategies to be the lowest correlated strategies. But in this case, we actually saw them really time the inflection point of the market very well, because coming into this month and looking back at the first quarter or the last 5 months, macro strategies have had very strong performance. So you've seen strong performance through a risk on environment, and then you see strong inversely correlated gains through a risk off environment. That's really exciting, and we're going to continue talking about that as we look at the sub strategies and the year-to-date performance as well. Going one level deeper into performance of the month of April, we're looking at the top sub-strategy areas of performance. You can see here, energy basic materials was the leading area of performance for sub-strategies. Of course, that's in equity hedge. We know equities declined about 5%. Equity hedge, HFR 500 energy based materials gained 2.7%, which is pretty interesting. Also, we talked about macro in the previous slide. The sub-strategy within macro that was really the biggest driver of those gains was the systematic diversified. We all know these are trend following quantitative CTA strategies, 2.6% gain there. And again, these are having really great years because, like I was saying in the previous slide, it's great that the uncorrelated strategies post gains when the market's down, but they also posted strong gains when the markets were up in the first quarter. So that's a really exciting thing for investors. The other thing, 2.4% gain for the HFR 500 macro discretionary thematic. So you get really both engines of macro, one side being the quantitative systematic strategy, the other being the fundamental discretionary strategies. Oftentimes those two aren't positive in the same month because they're very different in terms of the fundamental drivers of that. In this case, both of them really up almost the same amount for the month of April, as you can see here. And then we've got 1.2 gain for the HFR 500 macro multi-strategy, which is really just a blend of the systematic and the fundamental strategies in a single fund. And then lastly, we have the event-driven distressed restructuring index, which gained 1%, which is interesting because event-driven had a difficult month, more on the equity credit correlated strategies, whereas distressed is a little different in that it's generally pretty idiosyncratic. And so those positions, those situations actually posted a gain of 92 basis points for the month of April. We now have 4 months in the books for hedge fund performance for 2024. I'm very excited to say that macro is having a very strong year. You can see here 9.33% gain in the first 4 months of the year. And I know I've said it a couple times, but really that's what's exciting about that is not only that it's the leading area and it's very strong, it was the strongest performance in 20 years for the first quarter. And when you combine the first quarter in April, you see two very different market paradigms of risk on environment in the first quarter and a risk off environment in April. And you saw that macros continue to build on the gains. So that's very exciting. 5.9% for the overall asset weighted composites. We have that in here because that's really all the different strategy areas. And that's taking, it's obviously weighting the funds by the assets. So it's giving more weight to the largest funds, which generally speaking, the largest, most concentrated funds are in the macro space. So that's the asset weighted itself is kind of tilted towards macro, not necessarily by design, but just by default. That's where a lot of the largest funds are. 4.2% gain for the fund weighted, the HFR 500 fund weighted composite. 3.7% for equity hedge overall, and you know that obviously was a strong area in the first quarter, came down a little bit in April. Same thing for event driven, which you can see here, down 43 basis points so far for the year. And then fixed income based relative value, you can see they're up 164 thus far. And with the declines in April, U.S. equities are only up a very narrow third of a percent thus far for 2024 after being up very strongly in February and March, as you all know. Finally, drilling one level deeper into the sub-strategy drivers of performance thus far in the first 4 months of the year, taking a slightly longer view of time than just April, bolting that onto the first quarter. The story really hasn't changed very much. It's pretty much the same areas of leadership. You can see here the leading area, the quantitative, systematic, just diversified HFR 500 macro. That's up 14% thus far in the first 4 months. So that's a very exciting performance. And again, that compares with U.S. equities, as I said earlier, only up about a third of a percent for the year after the decline in April. You can see here the HFR 500 commodity index. That's fundamental commodity trading, which contrasts with the CTAs, which they're primarily futures trading. They can be in hundreds of different assets across commodities, currency, fixed income, and equities. Commodity here is the HFR 500 commodities fundamental only commodity, and you can see that also had a strong year so far, 10.75% there. So you have oil and gold and agricultural commodities and things like that. That's what people are trading in that space. HFR 500 macro multi-strategy 8.2%. Again, that really is single funds which combine multiple sub-strategies into a single fund vehicle, 8.2% there. 8.2 also for equity hedge technology. We know that was very strong in the February-March timeframe, and even after pairing those gains a little bit in April, you can see it's still one of the leading areas of performance for the first 4 months of the year. And then 7.9% in energy base and materials, which obviously is very related to it's similar exposures, not the same, but similar to what we have in the HFR 500 macro commodity is what we have in the HFR 500 energy based materials index. There, 7.9% gain. Again, all of those well ahead of the just narrow gain of U.S. equities of a third of a percent for the year. So all in all, it's been a great year thus far with these strategies in the lead for top performing areas. As you know, there's a lot of great information on our website about the HFR 500 and all of the index families that HFR runs. So we just relaunched that website a few weeks ago. So if you haven't been there, please visit the website, www.hfr.com. When you get there, please be sure to check out the Investor Guidebook. There's great materials there talking a lot about the different use cases associated with the HFR 500 indices and all of our investable indices. So please click on that and you can download a copy of that. If you're watching this video, you know that we do regular performance commentaries on different index families. We do the HFRX and the HFR 500, and we do other videos and webinars, which you can see in the video library. And as you know, if you have questions and you'd like to set up a call, you can send an email to hfr500@hfr.com. You can reach out to me directly, Ken Hines at HFR, or if you want to, if you're working with any of the others here at HFR, just send them an email and let them know, and I can arrange to speak with you about any of these materials or questions that you might have. Thanks. Look forward to speaking with you next week. Thank you.